Good morning, everybody. We have a higher trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. December corn futures up 3/4 cent at 551 and a half. November soybeans up 4 1/4 at 1324 and a quarter. December Chicago wheat up 2 1/4 at 745. December Kansas City wheat up 1 1/4 at 729 and a half. December spring wheat is up 6.5 cents at 911. If you guys are listening on the podcast, as always, appreciate it. Leave me a review. Leave me a rating. Remember, if Apple is slow to show you these episodes in the morning, check out some of the other podcast apps out there. If you're watching on YouTube, guys, make sure you subscribe to the channel. Make sure you like these videos. Help YouTube to spread this stuff out and help me to grow this channel. I want to get up to 5,000 subscribers. That's my goal. We're sitting at about 2,600 and change. So if you're watching these videos consistently, you like the content, help me out, hit that subscribe button. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. For $49 a month, I offer a really nice subscription service that includes a ton of information, all of my grain marketing recommendations. My morning email goes out every business day at 6:30 a.m. Central Time. It's extremely detailed. Every overnight headline that you need, every piece of weather information that you need. It's really a great value here, guys. $49 a month, cancel anytime, no other fee, no other obligation. I won't try to sell you anything else, I promise. I've said that in the past, and that continues to be true. So certainly check that out. Yesterday is what a lot of people, myself included, would call a risk-off day in the commodity markets. Not only did the grain markets finish lower yesterday, but just about every commodity market on the planet finished lower yesterday. Markets that finished lower yesterday include corn, soybeans, wheat, oats, canola, cattle, feeder cattle, hogs, cotton, cocoa, coffee, sugar, orange juice, lumber, gold, silver, copper, crude oil, RBOB, unleaded, and natural gas. Some people might argue a couple different things. First off, the Fed told us this week, following the release of their July minutes, that the tapering of asset purchases is very likely this year. And I think that could have caused some of this liquidation. The other thing I think has to do with the resurgence in COVID cases, especially in China. But in any case, no matter the reason, it appears as if large money managers, at least yesterday, wanted out of some of this long commodity exposure. And does that continue into today? Could it continue into next week or during the next couple weeks or even months? That remains to be seen. The stock market did act well yesterday. It was lower at one point and came back and finished the day mixed. Now we're lower in the stocks here this morning. The S&P's off about 16. The Dow's off 130. But we're in kind of, at least short term here, some kind of risk-off type environment where large money managers appear to just be taking risk off of the table for whatever reason. And again, I think the two big reasons would be the tapering talk and this resurgence in virus cases. Pro Farmer released findings from Iowa and Minnesota yesterday. The Iowa corn number was above both last year and the 3-year 2-year average. Same thing with the soybean pod count in Iowa, above last year and also above the 3-year 2-year average. Minnesota, totally different story. Both the corn yield estimate and the soybean pod count were below last year, below the 3-year 2-year average. Pro Farmer will release national crop estimates, I believe, this afternoon after the markets close. So I will talk about those on Monday. We've got some rains on the radar here this morning, moving across the Dakotas, moving across Nebraska. We've actually already seen some decent accumulation. Here's what the radar looks like here real time. And you've got a pretty big system across a good chunk of North Dakota, lesser stuff over South Dakota, a pretty decent system moving across eastern Nebraska here. And some of these areas of North Dakota, South Dakota, and Nebraska have already seen accumulation of up to an inch or over an inch of rain in some areas. And that's certainly not every area, but not a bad looking system at all this morning. Here's the next 7 days in terms of the forecast. Some more rain for North Dakota in particular. And the system that's on the radar here this morning, guys, this is going to move into Minnesota and Iowa here over the next couple of days. And then you've got kind of a follow-up system after that begins on Sunday, Monday. Now, this system that we've got going here this morning is in all likelihood going to kind of break up before it hits the eastern Corn Belt. So you're not going to see a ton of rain, relatively speaking, in Illinois, Indiana, Ohio, places like that. But certainly welcome rains for the Dakotas, for Minnesota, assuming that the rains get there, and I believe that they will. So not a bad-looking deal at all. And that may very well help the soybean crop and even the corn crop to some extent. Soybean export sales were strong last week. New crop sales for the week totaled 2.14 million metric tons. That was above trade expectations. We've now seen 11 consecutive days of flash sales of soybeans, including 263,000. That's just under 10 million bushels reported yesterday. The way that it stands in total right now, new crop soybean commitments are basically about average versus the last 10 years. They are running 33% behind last year. And I discussed yesterday how, these headlines regarding all these flash sales, they sound great, but in reality, we're not where we need to be when it comes to soybean sales. New crop corn commitments, however, are fantastic. They're record high. They're 52% above last year's pace, and that is largely due, again, to very early and aggressive Chinese buying that we saw back in April and May. Wheat sales are very poor. They're the second worst, I believe, in the last 10 years. They're 18% behind last year. So soybean sales and wheat sales in regard to exports, and I'm talking new crop soybeans, and then with wheat, I'm talking about the current marketing year, of course. Soybeans and wheat, we need to pick up in regard to export business. Corn has been really good in terms of sales, again, largely because of that early stuff that China did, not because of recent activity. Chinese soybean imports declined in July. Customs data show that imports for the month totaled 8.67 million metric tons. That's down 14.1% versus the same month last year. They've got a couple different things going on in China. Poor crush margins amid reduced demand from the country's hog sector. They're also feeding a lot more wheat in China, which has reduced demand for meal. And there are a lot of analysts out there who believe that Chinese soybean imports may continue to slow during the next few months. And that's a big problem. Not only because that's typically the big U.S. export window here is the last 3-4 months of the year into the first couple months of the following year, but also because Brazil had a monster crop and may be competitive longer than they typically are in regard to the soybean market and export prices. So this new crop demand situation in regard to beans and China in particular is a big question mark. The cattle market, just like every other commodity, finished lower yesterday. We have a cattle on feed report after the close today. I'll talk about that on Monday, but that could be a market mover come Monday morning, of course. The outside markets this morning, the U.S. dollar is up a little bit. The stocks are off. The S&P's down 16. The Dow's off 140. Bonds are up a couple ticks. Gold and silver are mixed. Crude oil is a little bit lower. Everybody have a wonderful weekend. I'll talk to you on Monday.